There is a moment in every empire's history when confidence curdles into desperation, when the mask of strength slips, revealing the panic underneath. For the United States, that moment arrived in the spring of 2025 on a day the administration called Liberation Day. While the White House press secretary smiled for the cameras and spoke of economic sovereignty, behind closed doors in the Treasury Department, career economists were quietly updating their resumes. They knew what was coming. On April 2nd, 2025, President Trump signed an executive order that would reshape the global economy. He imposed a minimum 10% tariff on all United States imports, with rates climbing as high as 50% on 57 specific countries. By August, the average effective tariff rate had climbed to nearly 17%, the highest level in over a century. To put this in perspective, the last time America taxed imports at these rates, the Great Depression was just beginning. But here's what makes this different from every other protectionist gambit in history. Trump isn't doing this because he believes in tariffs. He's doing it because he believes in chaos. This is the Madman Theory in action, the deliberate projection of unpredictability to extract concessions from enemies and allies alike. And the question that keeps Treasury officials awake at 3 a.m. is simple. Is this economic genius, or is this national suicide? To understand what's happening right now, you need to go back to 1968. Richard Nixon, campaigning for president, had a problem. The Vietnam War was a meat grinder, consuming American lives and tax dollars with no end in sight. The North Vietnamese weren't budging at the negotiating table because they knew America was a democracy, predictable and constrained by public opinion. So Nixon, through his advisor Henry Kissinger, developed a strategy. He would make them believe he was insane. Nixon wanted the communists to think he was capable of anything, up to and including launching nuclear weapons. He instructed his staff to spread rumours that the president had been pushed too far, that he was unstable, that there was no telling what he might do. The goal was to create such fear of unpredictability that adversaries would cave rather than risk provoking him. Historians call this the Madman Theory, and while Nixon's version ultimately failed, the concept has haunted American foreign policy ever since. Fast forward to 2025. Trump has resurrected the Madman Theory, not for war, but for trade. His Treasury Secretary, Scott Bessent, calls it strategic uncertainty. The idea is that if trading partners never know what Trump will do next, they'll be forced to negotiate from a position of weakness, constantly scrambling to avoid the next tariff bomb. In game theory terms, unpredictability becomes leverage. And at first, it appeared to work. The United Kingdom quickly agreed to concessions. NATO members pledged to increase defence spending to 5% of GDP, a demand that had been ignored for years. Even China, after months of escalating tit-for-tat tariffs, agreed to a temporary truce, reducing bilateral tariffs from 125% to 10%. From Trump's perspective, the chaos was paying dividends. But here's the trap. The Madman Theory only works if everyone believes you're crazy enough to hurt yourself along with them, yet sane enough to stop short of total destruction. And Trump has already blown that delicate balance. By publicly bragging about his unpredictability, by making it part of his brand, he's destroyed the ambiguity that makes the strategy effective. When you announce you're playing the madman, you're no longer a madman. You're just an actor everyone can see through, and world leaders are starting to call his bluff. China, after watching Trump pause tariffs, delay auto duties, and negotiate carve-outs for dozens of industries, has realised something crucial. Trump blinks. He threatens total economic war, then backs down when Wall Street panics or consumer prices spike. This happened in April, when the stock market crashed after Liberation Day. It happened again in August, when Treasury bond yields spiked. Each time Trump retreats, he loses credibility. And in international negotiations, credibility is currency. Let's talk about what these tariffs actually do. The Tax Foundation estimates that Trump's tariffs will cost the average American household $1,500 in 2026. That's not a political talking point, that's math. When you tax imports, American companies pay those taxes, and then they pass the costs to consumers. Your toys cost more, your electronics cost more, your copper pipes, your aluminium cans, your cars. Everything that crosses a border is now 15 to 20% more expensive. But the pain doesn't stop at the checkout counter. Trump promised that tariffs would bring back manufacturing jobs, that factories would return to American soil. It hasn't happened. Jobs growth slowed throughout 2025. Manufacturing employment is flat. Why? Because you can't rebuild an industrial base in 12 months. It took 40 years to offshore American manufacturing. You can't reverse that with executive orders and tax penalties. Penn Wharton budget model ran the numbers and they're devastating. They project that Trump's tariff policies, if maintained, will reduce long-run GDP by 6% and wages by 5%. For a middle-income household, that translates to a $22,000 lifetime loss. Think about that. $22,000, not because of a recession or a pandemic, but because of deliberate policy choices. And here's the kicker. The economic damage from these tariffs is twice as large as if the government had simply raised the corporate tax rate from 21 to 36%. Tariffs are among the most distorting, economically destructive taxes you can impose. They don't just raise prices, they break supply chains, destroy comparative advantage, and trigger retaliation. The entire edifice of global trade, built painstakingly over 70 years, is being dismantled for what amounts to a negotiating tactic. Now, Trump and his advisors would tell you this is worth it. They'd argue that short-term pain is necessary to break China's grip on American industry, to force companies to reshore production, to restore economic sovereignty. And there's a seductive logic to that argument. America does have a massive trade deficit. American manufacturing has been hollowed out. Something needs to change. But here's what they're not telling you. The reason tariffs won't work is that the United States economy is no longer built for manufacturing. The American workforce is expensive, highly educated, and concentrated in service industries. Even if you tax Chinese imports to the moon, companies won't build factories in Ohio. They'll build them in Vietnam, in Mexico, in India. The jobs won't come home. They'll just go somewhere else that's cheaper. And while Trump plays economic chicken with the world, there's a much bigger crisis brewing in the background. A crisis that makes tariff wars look like a sideshow. The United States national debt has crossed $38 trillion. Let me say that again, slowly. $38 trillion. That's $113,000 for every man, woman, and child in America. That's $285,000 per household. But the raw number, as staggering as it is, doesn't capture the full horror of the situation. What should terrify you is the interest. In 2020, when COVID first hit, the United States government paid $345 billion in interest on the debt. That was already a massive sum. 6 years later, in 2026, that number has nearly tripled. The government is now paying close to $1 trillion per year just in interest. Not paying down the debt, not funding programs, just paying the bankers their cut. To put this in perspective, interest payments are now the second largest item in the federal budget, larger than defence, larger than Medicare. The only thing the government spends more on is Social Security. And these payments are projected to grow to $1.8 trillion by 2035. That's not a distant problem. That's less than 10 years away. Former Treasury Secretary Janet Yellen, a woman not known for hyperbole, recently warned that the United States is approaching something called fiscal dominance. This is the point where the debt becomes so large that it constrains the Federal Reserve's ability to fight inflation. Imagine the economy as a car, Yellen explained. The Treasury is the driver, ready to spend. The Fed is the brake, ready to raise interest rates if the Treasury spends too much. But now the car is towing a $38 trillion trailer. The weight is so massive that if the Fed hits the brakes too hard, the entire system explodes. Here's why. When the Fed raises interest rates to fight inflation, it increases the government's borrowing costs. But when the debt is $38 trillion, even a small increase in rates translates to hundreds of billions in additional interest payments. Those payments don't disappear. They flow into the private sector as income, which then gets spent, which then fuels more inflation. The Fed's anti-inflation tool becomes an inflation accelerator. The car is out of control. And Trump's solution to this? Tariffs. He promised that tariff revenue would help pay down the debt, maybe even replace income taxes entirely. The numbers tell a different story. Tariffs are expected to bring in between $300 to $400 billion per year. That sounds impressive until you realise it's barely 1/3 of the annual interest payment. If every single dollar of tariff revenue went straight to debt service, it would take 120 years to pay off the current balance. And that's assuming the debt doesn't grow, which it absolutely will. So the tariffs can't save the budget. What about spending cuts? Trump appointed Elon Musk to lead the Department of Government Efficiency with a mandate to find $2 trillion in savings. Musk, being Musk, promised to revolutionise government the way he revolutionised electric cars and social media. But here's the problem. The federal government isn't a tech company you can disrupt with clever algorithms and mass layoffs. Most federal spending is mandatory. Social Security, Medicare, Medicaid, and interest on the debt account for roughly 70% of all outlays. You can't touch those without a political bloodbath. The remaining 30% includes defence, which Trump has actually increased. So where exactly are you going to cut $2 trillion? From the National Park Service? From weather forecasting? From food safety inspections? The brutal truth is that the United States government has built a spending machine that cannot be stopped. 75 million baby boomers are retiring and going on Social Security and Medicare. That's not a policy choice, that's demographics. And demographics don't care about your budget theories or your efficiency task forces. The costs are baked in, and they're growing every year. This is why some economists believe the United States has already entered what they call the era of imperial liquidation. The empire can no longer afford to maintain itself, so it begins selling off assets, squeezing allies, and resorting to coercion. The desperation becomes visible. And that's exactly what we're seeing. Look at Venezuela. For years, the United States tried to overthrow Nicolas Maduro with sanctions, coups, and diplomatic pressure. It failed. But then, in late 2025, American oil refineries started running low on heavy crude, the specific type of oil they need to produce diesel. The Strategic Petroleum Reserve, drained by the previous administration to keep gas prices low, was nearly empty. So what did Trump do? He quietly sent diplomats back to Caracas to negotiate with the very man he'd tried to destroy. That's not strength, that's desperation. Or look at China. Trump ran on a platform of destroying the Chinese economy with tariffs and sanctions. But behind closed doors, Treasury Secretary Bessent had to call Beijing and beg them not to dump their holdings of United States Treasury bonds. Because if China decides to liquidate even a fraction of the hundreds of billions in debt they hold, American interest rates would spike, mortgages would become unaffordable, and the stock market would collapse. Trump is trying to hold a gun to China's head, while China holds the deed to his house. This is the fundamental contradiction at the heart of Trump's madman strategy. You can't project strength through chaos when everyone knows you're desperate. You can't threaten economic war when you're buried under $38 trillion of debt and your biggest adversary is your biggest creditor. The bluff only works if you have a strong hand, and Trump's hand is garbage. So where does this leave us? If Trump pushes ahead with the full tariff regime, if he refuses to blink, the economic damage could push the United States into recession. Job losses, falling incomes, political unrest. The madman strategy crashes the economy to prove a point that nobody believes anyway. That's the suicide scenario. But if Trump backs down, if he keeps negotiating carve-outs and delays and exemptions, then the entire strategy collapses. Allies and adversaries learn that his threats are hollow. They stop taking him seriously. America's leverage evaporates, and the United States becomes just another debtor nation, declining slowly, unable to dictate terms. That's the slow death scenario. There's a third possibility, and it's the one that terrifies economists the most. The United States might try to inflate its way out. If the government can't cut spending and it can't raise enough revenue, there's only one option left: print money. Not literally printing, but having the Federal Reserve buy government debt by creating new dollars. This would allow the government to pay its bills without default, but it would also devalue the currency, driving inflation higher and higher until the dollar loses its status as the global reserve currency. And if the dollar loses that status, if oil starts trading in yuan, if countries stop holding treasury bonds as safe assets, the American standard of living collapses. Suddenly, imports become crushingly expensive, gas prices quintuple, electronics become luxury goods. The wealth that Americans have taken for granted for 80 years evaporates. This is the nightmare that keeps former Federal Reserve chairs awake at night. But let's be clear, none of this had to happen. The United States has the largest economy on earth, the most innovative companies, the best universities, and abundant natural resources. The country could have managed its debt, invested in infrastructure, and maintained its alliances. Instead, it chose the madman strategy. It chose to weaponize uncertainty, to burn credibility, to treat the global economy like a reality television show. And now the bill is coming due. Trump promised to make America great again, to restore manufacturing, to drain the swamp. Instead, he's draining the Strategic Petroleum Reserve, begging enemies for resources, and pushing the country closer to the fiscal cliff. The question is not whether the United States will pay a price for this strategy. The question is how high that price will be. Some optimists argue that America always finds a way, that the economy is resilient, that innovation will save the day, that the rest of the world needs the United States more than the United States needs them. Maybe. But betting your entire economy on the hope that something will work out is not a strategy. It's a prayer. Others point out that Trump's poll numbers on the economy are slipping, that consumer sentiment is souring, that even his own party is starting to push back on the tariffs. Maybe political pressure will force a course correction. Maybe the Supreme Court, currently weighing the legality of the tariffs, will strike them down and end the experiment. Maybe sanity will prevail. But if history teaches us anything, it's this. Empires don't collapse because they lack resources or technology. They collapse because their leaders lose touch with reality. They collapse because arrogance blinds them to danger. They collapse because they believe their own myths of invincibility until the moment those myths shatter. Trump's madman strategy might extract a few short-term wins, a trade deal here, a diplomatic concession there. But the long-term costs are mounting. Every time he threatens and then backs down, he loses credibility. Every time he imposes a tariff, he damages supply chains and raises costs. Every time he borrows more to fund tax cuts, he digs the debt hole deeper. The foundation is cracking. And the rest of the world is watching. China is building alternative payment systems. Europe is hedging its bets. The BRICS nations are quietly constructing a parallel financial architecture that doesn't rely on the dollar. They're not doing this because they hate America. They're doing it because they've seen the madman act before, and they know how it ends. So is Trump's economic strategy genius or suicide? The answer might be both. It's genius in the sense that it's forcing conversations that needed to happen. America's reliance on Chinese manufacturing is a strategic vulnerability. The trade deficit is unsustainable. The debt is a ticking time bomb. These are real problems that decades of politicians ignored, but the execution is suicidal. You don't fix a trade deficit by destroying the global trading system. You don't rebuild manufacturing by making everything more expensive. You don't restore confidence by projecting chaos. And you certainly don't solve a debt crisis by borrowing trillions more for tax cuts while pretending tariffs will balance the budget. The tragedy is that there are solutions. The United States could invest in education and infrastructure to make American workers more productive. It could reform the tax code to raise revenue without killing growth. It could negotiate multilateral trade agreements that protect workers while maintaining open markets. It could implement a long-term debt reduction plan that phases in gradually without crashing the economy. But none of those solutions are dramatic. None of them make good television. None of them satisfy the urge to punish enemies and reward supporters. So instead, we get the Madman strategy. We get Liberation Day and reciprocal tariffs and strategic uncertainty. We get theatre masquerading as policy. And while the show plays out, the fundamentals keep deteriorating. The debt keeps growing at $6 billion per day. Interest payments keep climbing. The manufacturing jobs don't come back. The trade deficit barely budges. The gap between rich and poor widens. And slowly, quietly, America's position in the world erodes. The Madman Theory failed in the 1970s because the Soviets didn't believe Nixon was actually insane. They called his bluff and the strategy collapsed. Trump's version will fail for the same reason. China, Europe, and the rest of the world have seen this playbook before. They know that beneath the chaos, there's just desperation. And desperate powers don't inspire fear, they inspire opportunism. 2026 will be the year the world finds out whether Trump can pull off the impossible, whether the madman strategy can bend economics to his will, whether sheer force of personality can overcome $38 trillion of debt and a century of globalization. The odds are not in his favour. If you want to understand what happens next, don't listen to the press conferences or the tweets. Watch the bond market. Watch the dollar's value against other currencies. Watch whether countries keep buying treasury debt or start quietly selling. Watch whether inflation stays contained or starts creeping higher. These are the real indicators. These are the numbers that don't lie. And if you see those numbers start to move in the wrong direction, if you see bond yields spiking or the dollar weakening or inflation accelerating, then you'll know. The madman strategy isn't genius, it's suicide. And we're all passengers on this ride. If you found this breakdown valuable, make sure you're subscribed because 2026 is going to be one of the most volatile economic years in modern history. This is the year we find out whether American exceptionalism is real or just a story we told ourselves while the empire slowly crumbled. And either way, you're going to want to understand what's happening before the mainstream media figures it out. The game is on, the stakes couldn't be higher, and the clock is ticking. Economic genius or suicide in 2026.